Good morning. My name is Tofpik. I am Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. This is the London Morning Commentary on Thursday, the 5th of July. Now we're going to look across a number of charts, and the first one we're going to start off with is the Aussie dollar. Now there's two minor features and one large feature which I'd like you to look at. It's a messy chart, but there's one major feature. There's a messy chart, but there's some interesting action. On Monday we had, as you can see there on the bottom right hand corner, a key reversal down. That's a higher high and a lower low and below two previous closes. That would be an indicator the market should be heading down. Now we didn't follow that through as such, but it's still there, and it seems that the market decided initially not to follow with a great big move, but just to keep the pot boiling. Now you can see a target marked X there. That would be that bear flag that you can see, which stretches from April through to June. Actually starts sort of late March, early April, or mid-April, and then goes all the way down to where we are now. So that target's around about 72.50. And those are the minor patterns. And then there's this huge pattern, this huge action of all the way from May 17 to where we are now, and looking at it and saying, is this a big, big double top? If it is a big double top, then the implication is there's a target below the bottom of the chart around 69.50. So I don't think we're necessarily done yet with the downside. Top side, well, you've got to be looking potentially at 74.92, that 50-cent Fibonacci level, and also sort of ties in with the bottom of the double top. That could be potentially the way it'll turn the market if we get consecutive closes over that. Now move on to the next one, which is a minor currency, which is the Brazilian real. Now this is a case of if it ain't broke, don't fix it. As you can see, we've had this lovely move since the beginning of the year, which has moved all the way up to where we are now, up in the sort of just under the 4 level, and that's purely because of the diamond bottom, which caused this market to move up all the way to where we are now. You've got support underneath the market, which is at 380 even, which is the uptrend. You've got this beautiful sort of broken but still active Andrews pitchfork, which is running at 387.5, which is underneath the market at the moment. And on the top side, you've got the resistance, which is around about 396.70. Keep that in mind, that this is still moving along nicely along this sort of basically a bullish channel, which was originated with a bullish bow tie back in February, and prior to that, the end of the year, the start of the year, the lopsided bullish diamond, and we're still going up onwards and upwards in that. So it's a nice one to keep in mind and keep following on. Now the next thing we're going to go on to and look at is NYMEX crude oil futures, and we'll be looking at the front month continuous in that particular respect. And you can see there, this is a fairly active market. We've got some good underneath support around about the 69.43 area, and then more closely at 71.40, which is the middle tine of that most recent Andrews pitchfork. A little bit of indecision yesterday, or day before yesterday. We've sort of looked like we're going to go higher. Then yesterday we had the US holidays, and then with an indecisive doji cross on the Tuesday. So we've got a small congestion band based around 75 even, and that's what's causing the thing to sort of slightly halt. But there's a thing, top left hand corner, you can see an X mark, 2015, 2016. What does that relate to? Well, that relates to a huge, well actually there's two of them, there's two huge reverse head and shoulders patterns. And you're coming up to the first target, and bearing in mind this is from 2015, 2016. We're seeing the first target round about the 76.35 area, so within spitting distance of that. So that would be a first reasonable level to look at, and then look again at the next one after that, which is significantly higher. We're next going to go on to one of my favorites, which is LME copper, 3-month copper. Now, those of you who've listened to me here and in other media, and in my written format, and in anything I've ever done, have been going on about this action over June. And in the last week of June, or last week and a half of June, I said, we may have that rarest of things, a huge, bearish, rare key reversal down on the monthly chart. and we turned out to have so. Last week of June actually had two key reversals on the daily chart, as you can see marked there. We've punched down through a number of support areas, and we're looking as if we're going to still carry on. The thing that's key at the moment is the 6404 level. That's the 50% Fibonacci from the May to December 2017 action. But it looks still very, very bearish. We've got this huge overhang of resistance and supply, which is from December last year all the way up to June. This is now pressuring the market lower. And though the support is layered, it's not looking that great. And finally, I'll draw your attention to the bearish bow tie formation, which you can see on the chart there. That's when you see three or more moving averages cross over. It's on the middle right-hand side of the chart. You've seen three or more moving averages cross over, and in this particular case, point downwards. Now, the kick-in for that is between the 24th and the 31st of July. So watch out for between the 24th and the 31st of July for a further potential move to try and push it lower, potentially. Let's see what happens when we get there. And the final one is an index, the S&P futures contract. And this has been an interesting one in its own particular way. You can see there the broken and destroyed lower time of the 2016 Andrews pitchfork, which is up around about 28.20. I've left it on there. Why would I leave it on there? Because it's still acting. It's got echoes. It's been broken. It's been punched through on the bottom side, and it ran the market for a year and a bit, actually nearly 2 years. So it still has echoes. And those echoes have been to keep a cap on the market. What's holding the market up? We have a congestion of the medium moving average, which is around about 2707, plus Fibonacci levels, which stretch from 2606 down to 2697. So effectively, what you've got is a band of support, which is between 2707 and 2697. Underneath the market and above the market, around about the 2820 area, and the nearby 2800 as well, which is the previous high back in March. They're pushing down on it. Coming up quite quickly is the long moving average, and that's at 2676 area, 2674 area at the moment. So I think we're coming to a cusp. If we break through that band of support, then you can see a significant move down, initially at least down to about the 2665, maybe 2650 area, which doesn't sound very much. But those are really close, good supports. If they go, then you're going to see a real move down below 2600 potentially, even down to below to mid 2500s. So just be careful about that one. The key area 2707 down to 2697, and the top side 2820. So in the meantime, enjoy the World Cup and good trading.